Happy Aloha Friday, everyone. Neutral, 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 neutral. This is how I have stood on the market for quite some time, and this is how I continue to stand. And today is a perfect example of why. Following yesterday's very powerful rally, it appeared that what was really strange yesterday is that I watched a lot of people go from top calling to we've bottomed called. And I didn't just see a couple of good traders I know that do this and newbies that I know who are always going to be like this. But I saw, more than I would have figured I would have saw. So by actually seeing so many people calling a bottom, I decided to go into the camp. Well, I think that we're just going to continue to chop around. I'll take back a little bit more of my hedge that I just put on, which the last three hedges have turned into pure shit overall thanks to the choppy trading. But once again, that's why these are only 5% hedges like the UVXY, and you don't see me going long 25% UVXY or 50% of my account or the entire 100% of whatever cash is on hand long the UVXY. This is why these signals remain 5%. We are in summer. Summer is never really a trending market. Buy signals during the summer normally don't produce huge gains, and choppiness is normally the way summers go. Continuing that theme, it made it very simple to me to stay neutral. And today that theory continues. The S&P 500 though sold off today 0.60%, as you can see, only pulling back a little bit following yesterday's gains and did so on lower volume. So that's a very nice thing to see. The Nasdaq also pulled back 0.63%, which is still gives it more of a gain than a loss from the previous day's session, and it did so on lower volume. Once again, very nice to see. And the Russell 2000, while it was one of the weakest indexes on the day, you can see that it's still well above the 50-day moving average and consolidating quite nicely. And overall, every index continues to consolidate nicely. And to think that for a certain, without a doubt fact, that this market is either going to break out to the upside or break down to the downside is basically you telling me I am an idiot. I think I am so smart that I know more than the overall market. I think that I have a huge IQ, but clearly I don't have a huge IQ or EQ to be thinking that I know what the stock market is going to do on Monday. The true intelligent speculator knows that you must prepare for everything. That means a breakout higher, a breakdown lower, or more sideways action. And based on what we're seeing, I would place my bets on more sideways action since that's what we currently have. However, you should be ready to get long whatever stocks break out, leading stocks, if we do break out, and you should get ready to short the weakest stocks in the market and or the previous leaders if they start to roll over. But on that note, one of the previous leaders that I knew people were shorting was LinkedIn. Look at what LinkedIn did today on a down day in the market. Retook the 50-day moving average. That doesn't strike me as a market that's necessarily extremely weak. And Facebook, with all the problems that it's got going on, and with all the down days and huge negative divergence in the relative strength lately compared to the overall market, it's actually holding up quite well. So when you see things like this out there, and really the only leading stock that I saw that did not do well today, American Express, I just really don't have a very bearish bias here. I need to see it one more confirmation of the sell-off. If UVXY, for instance, closes above 77.25 and closes at 78 on Monday, I know to add another 5% to UVXY. If we break down on huge volume, I know to add 10%. And that's all I know. New highs in price, I want to add. We continue in this little area right here. I don't want to do anything. And if we break down below the 50-day moving average, I want to get rid of another 25%. And if we confirm a sell-off below there and don't hit new lows, I want to get rid of another 25 to 50%. And if we do break down to new lows, I want to get rid of all of it. That's it. That's the game plan. No more thinking about it than that. You just need to keep it simple. However, were there any ugly stocks out there breaking down today? Not really, but it was disappointing to see First Solar break down below the 50-day moving average, and that's why we got whipped out of TAN. But of course, as so often happens and what you do see in stronger tapes, as soon as you get whipped out, they go right back up. EAC 50% sell yesterday is a perfect example of that. PFBI is a perfect example of that, but one that was not, HIMX. 3 days, 3 sells for HIMX. 25% sell with the close below the 50-day moving average here. First close below the 50-day moving average, and it was on lower volume. Remember the last time we broke below the 20-day moving average on lower volume, so no partial sell was made. This break, though, 25% sell, a confirmation move below that low on heavier volume. That was another 25% sell. And if you got a huge volume sell-off now below the 50-day moving average, unless there was a huge intraday reversal, it was a 100% sell. Huge intraday reversal, 50% sell. We got a huge sell-off below the 50-day moving average, and it did not come with an intraday reversal, as the wick of the top portion of the candle is longer than the wick at the bottom portion. That's bearish. Max Green red on the breakdown. Huge volume, second hugest volume ever. Traded almost 24 million shares today. That was I think it traded 24 million shares on its IPO day. This is a full sell. So while it's not perfect, oh, but Josh, you're going to leave the whole thing with 125% gain. If you would have sold at the top, you'd have a 222% gain. Yeah, if. Did you know that was the top? How many people saw that breakout that day and thought that we were going higher? I can tell you how many that I know, at least. 3. I knew 3 people that were asking me back here in May, how come I'm not buying HIMX's breakout? I told them because the pattern isn't symmetrical, it isn't nice, it's just not proper. And there you go. Now HIMX is giving us a full sell. This is why it stays disciplined. We took gains at 175%, 140%, and now we're leaving at 125%. You just want to get the big meaty portion of the moves, and that's what we got in HIMX. But that was our only sell tonight. We have no other sells. Perry is on watch. Perry closed below the 50-day moving average and did it on lower volume. Hey, Josh, you sold it whenever HIMX did it, but you didn't sell it when Perry did it. Well, this is why. Because Perry is holding the support levels of the previous 2 sessions when intraday it closed below the 50-day moving average and came back. That means the 1231, 1238 area is going to be my final cut loss area on Perry. If it closes below that level on heavy volume, we're completely out of the position. A lower volume close below those levels, and this line, which you see coincides with the pivot point area of the last breakout in May, not the pivot point area of where we went long in April, but the one in May. A breakdown below that line will lead to anywhere from a 50% to 75% sell. If it breaks down on heavy volume, it'll basically wipe out the 5% gains we have at the first position, and Perry will become a full sell. So Perry is on watch. Besides that, nothing else is on watch. What could have been possible longs today? Nothing. But BRP, very nice move. I showed you LinkedIn retaking the 50-day moving average. Smith & Wesson Holdings had a buyable gap up, had enough volume on the buyable gap up to get long. So if you bought that, everything's good. You use the low a day with a little bit of porosity, maybe 950 instead of 961 as a final cut loss area. But that looks great. I have XRM, a little tiny stock, breaking out of a very tight flag-like ascending wedging higher flag pattern, but it is breaking out of it nonetheless. NWY is another smaller stock, thinner stock, New York & Company, building a nice little flag pattern here. Hopefully it can break out of that. SCTY, Solar City, Elon Musk gave me a little move off the 50-day moving average and strong volume. I would watch that one. If the base was longer, this is a buyable move. Tesla on that also continues to consolidate very nicely, and this also is a very, very tight flag pattern that could unleash a major rally. If it breaks out of this flag pattern higher, we are going long. I don't give a damn if BOP is max red or if it isn't. And then also in the IPO land, EVTC, look at that thing continue to work 3 days ago. Guess I should have bought a little bit. You got C's breaking out higher. LXFR looks like that it wants to retake or take out the 50-day moving average. You got TWC, another media company, and CHTR breaking out, and that confirms a move yesterday on SBGI, NXST, GTN, and TVL. So it's not looking that bleak out there. Oh yeah, Disc K, there's another one that moved today. So, you know, you got a lot of stocks still moving out there. It doesn't look that bad. And it looks like these media stocks definitely want to, like, take the lead. It's crazy. I guess nobody can spend money that everybody's staying home and buying HBO and Cinemax or what have you. Have you not heard of Pirate Bay, everyone? Oh, okay. Anyway, so, you know, keep an eye on these media stocks, as they're the ones that are starting to move now, that are home building stocks, you know, acted a little bit funny. Still, some nice support yesterday and a rebound on a lot of these shares, so it wasn't terribly, you know, horrible still, I guess you could say, for the home builders. But But the biotechs and home builders need to be continue to watch. Further weakness there will more than likely break this market down. However, as long as we keep seeing rotation into like new leaders, like the media stocks, this market more than likely is going to break out higher. Still, we got to deal with the summertime. Have a great weekend, everyone. Aloha.